Are you ready?
Ready.
All right, let's go. Kevin here, top 100 financial advisor and best-selling author. We are here to talk about the stock market. Today I want to talk a little bit about Warren Buffett, one of the world's richest men who had his annual investors meeting this weekend. And there was something that I picked up on that I hope that most people picked up on as well. For those that don't know, he runs Berkshire Hathaway with his friend Charlie Munger, who is 98, and Warren Buffett is 91. So combined, they have almost 200 years of investing experience, which is a good thing for us to learn from. And one of the biggest lessons that I took away from this was that he spent $51 billion with a B within the first 3 months of this year. And that should tell you something. Number one, it tells you that this is that discount season, and this is the time to set yourself up for the next 3, 4, 5 years. Yes, I know that right now it's not fun. I know the market is down double digits. Somehow it was up today. I don't know how that happened, but in either case, I know it's not fun to watch your account in the red. I know it's not fun to believe and buy in a company and then it's just really doing you wrong. Okay, we're all, most of us anyway, are all in the same boat, but this can still be an opportunity for you to set yourself up for the future. And the reason why we say this is because Warren Buffett, again, legendary investor, has been doing this for at least, 2 of my lifetimes at a minimum. The thing is that he has been able to be patient and take advantage of market volatility, and he had cash on the side, and people were criticizing him the last 2 years or so, saying, look, what are you doing? Like, you got I think it was $147 billion or whatever the number was. You had $100 billion with a B basically sitting in a bank account, and you're not doing anything with it. In 2020, the market was going crazy, and there were so many things out there. It's like, what are you doing? And he waited, the market tanked, and he said, look, let me go in here and buy a few things. One of the things that he bought Chevron. He increased his position there. I think most people know about it. He also bought Occidental Petroleum. Both are oil companies. I don't feel great about oil right now based on why oil is up. So I'll just leave it at that. But they are doing well right now. Energy has actually done quite well since the end of last year. And we've talked a little bit as to why that is the case. But this is a lesson for us. This is a lesson for all of us in that, number one, long-term investing does still work. Boring companies still work. But also having the opportunity and having cash available. Having cash available in your account does not mean that you're not investing. You can do both. And I've talked about this before too. The way that I am currently investing when I do my dollar cost average on public is, let's say if I'm depositing $100 into the account, I don't actually have to invest the entire $100. I can put in 100 and invest 50, right? That means the next week I'll put in another 100 and only invest 50. Now I have $100 in cash, and there's an opportunity for me to buy into more companies that I think that may be on a dip, or that I can take advantage of something that I'm holding for the long term. An example, now I don't really believe in Netflix, but let's say if I did, that company dropped significantly right after earnings. I could say, well, look, it's $200, whatever the price is today, which is ridiculous to say, but it dropped, and guess who has an extra $100? Guess who has an extra $400, $500, $600 to invest? I do, right? Because I made sure that I had some cash on the side. And that is one of the biggest lessons in any market, but in a market like this where it feels like everything is down and things are choppy, and every other day you're getting a 900 point drop here, earnings report here, company falls double digits. These are those seasons where you can say, look, I'm buying here, I'm holding for the long term. Because the last time that this happened, 2020, or the time that happened before that, 2008, you can say, look, I'm buying this, I'm holding on to it, and in a year or two, sometimes 3 or 4, I'm going to benefit from getting something at what feels like bargain basement prices. If you go back and look at what happened in 2020, if you were buying in March, now none of us knew that was going to just last from really just February, March, absolutely crashed and then bounced back, but, right, as it was falling, you were buying during that time. You bought like a Tesla or whatever it was that you wanted to buy. Everything was on sale at that point. If you had bought then, when it was scary, when it wasn't fun, you made money. But if you sold and you weren't willing to sit down and just hold on for long enough, and you didn't pay attention to what you were buying and why you were buying it, then you might have let go, and you may not have seen the same profits that everyone else saw, or at least those who stayed firm. So this is that time. It is not fun. It is not easy. The water is shaky, right? This is not a beach. This is a hurricane for a lot of us, where the market is down double digits. That does not mean that just because the water is choppy and that the water is not calm and the water is panicking, it doesn't mean that you have to panic. You have to be the calm in the storm and be able to sit down and say, look, I'm evaluating these stocks. I am evaluating these companies, and I understand based on what my goals are and what I think and what I read about the company that this makes sense. And I think that this is going to make me money over X amount of time. You're not going to be right every single time. Okay, I'm going to let you know that now. I am not right every single time by any stretch of the imagination. I bought into it. I am currently regretting that. Okay, that is one of the biggest, I'm not going to call it one of the biggest mistakes I've ever made, but it's one of them, right? Target, that's starting to pay off a little bit, right? That makes sense. Intuit, for whatever reason, is not. Conversation for another day. We'll come back and reevaluate that one in June. However, right, you got to be right more times than not. And the longer you hold a stock, especially if it's a quality company, the more times you are going to be right. So again, this is an opportunity where cash is king, where cash is queen, where you have the opportunity to sit on just a little bit, not all of it, because I want my money to still grow, right? Maybe I can go out here and give me some dividends. So not all of it, but this is that opportunity to buy what you think is good on the cheap. Okay, so companies that are very cheap now. Let's take Amazon, if you really like Amazon, or even a Google, if you really like Google. You can get those for cheap, and once they do their stock splits, and once they continue to grow, once we get out of this phase, you might really set yourself up. It is definitely possible, not a guarantee, but it's definitely possible, and it is the blueprint that Warren Buffett has been using, again, for like 3 of my lifetimes, or at least 2 of my lifetimes, if I'm doing the math right. I'm 32. He's 91. Y'all do that math. All right, so that is it for me. Again, this is discount season. This is cash season. This is time to sit back, relax. I know it's not fun for a lot of us, but this is quality time, right? Quality stocks, quality investments are the ones that are winning right now. You want to make sure that your money is in the right place. All right, that's it for me. I'll talk to you later.